What's going on, everybody? Welcome back to another episode of Keys and Teas. Here I'm joined with Richard Price with NFM Lending, and he's going to tell you a little bit about mortgage myths that buyers should know before buying their first home. All right, in this video, the golf is horrendous. I played so bad, but a few times I get Richard in there and he's a pretty good golfer. But Richard absolutely crushes the real estate tips. So tune in to the real estate, the golf, just bear with me.
Oh, shit.
Firstly, Richard is going to tell you some of the myths that he hears buyers say all the time that actually end up not being true.
Yeah, so one of the biggest things that I find specifically with first-time home buyers is that they think they need a large savings to buy a house. But I've probably done over 50 transactions this year alone where we've gotten them qualified for down payment assistance and they've actually not even had to bring any money at all to the closing table. So if you're on the sidelines waiting to save money and you have a strong credit score and good job history, you might not have to have as big of a savings as you think. Oh, that's so good. Oh, chunky.
All right, a lot of buyers right now are scared because of high interest rates. Richard's going to tell you if now is a good or bad time to buy.
Yeah, great question. I think that the consensus amongst buyers is that they want to hold off until rates come down, which makes sense on the surface. When you dig a little deeper, the reason why I think now is a great time to buy is because a lot of people are on the sidelines right now, which means there's more opportunities for buyers than there ever has been. Listings are sitting longer. You don't have to go in and try to outbid the next guy. So you can get seller concessions for closing costs to buy that rate down. We also offer no cost refinances in the future. So if you buy now, get a great deal on the home, you can refinance into a lower rate later. If you plan to wait until rates come down, well, guess what? Everyone else is doing that as well. So while you might get a lower interest rate, you're going to get into bidding wars like we had in like 2021, where people are trying to fight for these homes. And in the long run, it'll cost you more money.
Buyers will often work either with lenders or with banks to get a loan for their home. Richard is going to tell you why going with a lender may be a little bit better than going with a bank.
Yeah, yep. Well, the obvious reason is that when you're going with a local mortgage company, all we do 24/7 is mortgages. These banks try to balance auto loans, credit cards, personal loans, checking, savings accounts, etc. So, you know, a lot of the times I find from my clients who go with me over a large bank is that they are just a number over there where, you know, someone like me, I'm available 24/7. You call me on a Saturday at 8 o'clock, you need to put an offer in. I'm here to give you payment scenarios and get a letter out to you immediately.
Choosing a lender can be sometimes difficult of which one to go with. So you definitely want one like Rich who can make it offer competitive, and he's going to tell you exactly how he can do that.
Yeah, so first and foremost, my brand, the NFM brand specifically, holds weight when offers come in. They know that our pre-approvals are solid and they know that we get the job done. One thing that I do personally is when one of my buyers puts an offer in, I follow up with the listing agent to let them know that they're a strong buyer, that we figure out what contingency we can waive, etc., to help push that through.
Cash offers are obviously a very enticing offer, but Richard's going to tell you if they always win.
Yeah, that's another great question. Cash offers, they just like Dylan said. I mean, it's money now to the seller, so it is super enticing. But a lot of the times, you can make your mortgage offer just as good as cash. Things like appraisal gaps, waiving appraisal contingency, waiving inspections, and then that's just as good as cash. And at NFM, we actually have a program called Fast as Cash, which means we can underwrite your file up front, and then when you're submitting an offer to the listing agent, we can waive those contingencies and close just as fast as someone who has cash. That's going to be
Question is, can I keep it low enough? Of first-time home buyers look to buy homes, and they want plenty of different options to help them buy that home. So you may be curious if you can buy a home with student loans.
Yeah, so you certainly can. The math breaks down to whatever your student loan balance is. If they're in forbearance, like a lot of people's are, we would calculate 0.5% of the loan amount. So I'll give you a quick example. Let's say you have $100,000 in student debt. We would count $500 against your debt to income ratio. And if you qualify with that payment, then we're golden.
A lot of buyers want to buy down their rate, so you might have heard of a 2-to-1 buy down and what that is. So Richard is going to tell you exactly what that is and if it's worth it.
It can be, specifically if you can have the builder or the seller pay for it, it is worth it. So what a 2-to-1 buy down is let's say your rate's $599. 2-to-1 means your first year rate will be $399, your second year rate will be $499, and then the rate for the rest of the 28 years would be $599, assuming you don't refinance.
Oh, good swing. Oh, yeah. Good swing. Yes, sir. Putting right up the hill. Wind's just going to kill it.
All right, a lot of buyers may want to lock in a rate before buying a home. Richard's going to tell you if that is possible.
Yeah, it certainly is possible, but you want to make sure that you have a professional that knows the market that can guide you accurately, because like currently it wouldn't make sense to lock in your rate because they are gradually ticking down right now, and it's predicted that they'll continue to dip down into the spring of next year.
There can be a lot of creativity in the finance part of a real estate transaction. So Richard's going to tell you the most creative deal he pulled off. And this is to show you whatever situation you may be in, you can still buy a house and get creative with how you do it.
Yeah, so there's a specific program. It's called the OFA program. It's the Ohio Housing Financing Agency. We're going to have to recut that. I forgot.
No, you're good. I can just cut it too.
Okay. Yeah, so there's this specific program in Ohio for buyers. It's called OFA. What it does is it offers either down payment assistance or a lower rate. A lot of the times you have to be a first-time home buyer to take advantage of this program, but if the home you're buying is in a target area, then you don't have to be. So I had a buyer recently who was selling a home and buying a new home. Their new home was in the target area, so I was able to get them down payment assistance and allow them to use the proceeds from the sale on their current home to pay off other debts to qualify for the loan. So they didn't have to use those proceeds as a down payment on the new home. Instead, they allotted that money towards an auto loan and a couple other credit cards that allowed them to buy more house.
Yep.
Thank you so much for watching this video, and thank you, Richard, for joining me in this golf video and sharing all the great information to first-time home buyers. So if you guys enjoy, make sure to leave a like, subscribe so you never miss more content, more real estate tips.
Yep.
But also, if you have any questions about mortgage, make sure to contact me so I can share with you Richard's information as well.